Hi, everyone. Welcome to the Startup Investing, how to spot the ones with high growth potential. I feel honored to be here today. We have incredible VCs and angel investors. So hopefully we will have a lot of people coming to see them and meet with them. So let me introduce our guests today. We have Nagati, CEO for Cleaver and an Egyptian social entrepreneur. So if Mr. Nagati, you can take the stage, that would be amazing. Then we also have Helmut Lenieks with us, chairman of the Latvian Business Angels. Thank you, Helmut. Alexander Chechenko, founder of To Be LU, an early stage VC fund and serial entrepreneurial. And finally, we have Said Murad, partner at Global Ventures and with experience at e-platform Jamalon. So thank you for being here. Okay, so let's get on with our first question. So as VCs are getting involved in funding earlier stages of startups, has this meant that angel investors need to fund at an earlier stage as well, getting into the FFFs, or are they competing? Can you tell us a little bit about this?
I can probably take on this because the thesis of 2BLU was to invest or to get into the companies together with the super angels. So we were really pre-seed and seed stage. But that was 8 years ago. Since then, the situation, at least in Europe, where I've been investing, has changed dramatically. There has been a lot more capital going to VCs. The funds started to get much earlier into the companies. When I was starting the fund, the minimum check size was 3 to 5 million. Nowadays, companies are prepared, or the funds are prepared to invest 300, 200, 500K, which actually means that the angels, incubators, accelerators are really, to some extent, going into the area of 3Fs.
Thank you, Alexander. Helmut, what is your point of view on this? You're, as an angel, you have experiences in this as well.
Yes, thank you. I don't consider VCs as a competition. So if angel comes on board, so it means he brings like more diversified knowledge. And also, one of the points, you cannot consider an angel investor as a only money giver. You can count him as a door opener, network, something like that. So he brings smart money as well. And this is not competition. Actually, VCs makes angel investor life easier also. It's team sports, not single competition.
Thank you, Helmut. And Nagati, what is your experience? And I'm sorry because I didn't let them introduce themselves. After answering this question, I'll let you guys introduce yourselves. I jumped in right away. That's me, always hyperactive. Thank you, Nagati.
I think that the angel investing is different because we don't have the capacity to do due diligence, to dig into the startups. It's just based on personal relationships, like the founder, you worked with them before, you just sign a small check. The VCs are a different league, like they put a much bigger check, they do much better homework. I think that the VCs come at a later stage, and I also think that the VCs help us exit. So most of the exits that angel investors are doing is mostly to VCs those days.
Thank you. And Said, what do you think?
Sure. So I agree with my colleagues. I think there has been an inkling for VCs to try to go a little bit earlier. One of the main reasons for that is solving for different levels of involvement, wanting bigger stakes in the company at an earlier stage, helping build out businesses from an earlier stage. There's specialized pre-seed and seed funds that are popping up as well. But again, I don't think they're competitive when compared to angels. I think they're very complementary, can operate together, can work together. And that could push people to move a little bit more into the FFF. But as Nagati was saying, it's very relationship driven at an earlier stage. You need to know the founders, and so it almost resembles FFF anyway.
Okay, why don't we take now is a good moment, to introduce yourselves a little bit further, give us some background so that the startuppers that are here in the audience can learn more about you. Nagiri, yeah?
So my name is Mohammed Abu Naga, but they call me Nagati. I'm a computer engineer. I graduated from the American University in Cairo 2009. I worked for Fawry for 8 years, 4 years as an employee and 4 years as an advisor. Fawry was the first tech company in Egypt to IPO. It reached $2.5 billion valuation in the Egyptian stock market. Now it's a bit lower. I then served as the regional director for Karimo, which was sold to Uber for $3.1 billion. Then I started a company called Halan with 2 other co-founders. We're trying to become a unicorn those days, so wish us luck. And then I started venture building for several corporates. I built for the Sawiris family, Orascom, Clever. I built for the Talawi family, CheckMe, which is a lab testing company. Clever is an attempt to build a digital bank in Egypt. I also serve on several boards of startups and incubators, and I'm working on a new M&A boutique for the Middle East to enhance the exits and help people sell or merge their startups in the next phase called Pi. And I'm happy to be here. Thank you.
Thank you.
My name is Helmut Slenex. I am currently chairman of the board of Latvian Business Angel Network. I also am entrepreneur and investor. I run several businesses, traditional businesses in Latvia, like commodity trading and IT. But the angel investing is like the most fashionable thing that I can imagine to do, like in my lifetime. So that's competing. That's very, I would say, fuel driving, and I cannot imagine doing something not anything to that. So yes, thank you for having me.
My name is Alexander Tkachenko. I'm a serial entrepreneur. On my 5th company now. I also set up to BLU, which is an early stage VC fund located in Luxembourg. The thesis of the fund was to go very early. As I explained, we invested into 25 companies across different regions: UK, Southeast Asia, Middle East, former Soviet Union countries, 3 exits, 2 failures, potentially 3 unicorns. I'm a very rare breed. I went back to the entrepreneurship, and 5 years ago I started a blockchain company called VNX, which last week actually announced that it became the first platform to get regulatory approval to tokenize precious metals in Europe. So we're one of the first companies to this market, and I'm very happy to be back in Dubai after 3 years. So let's see what can be done here.
I'm Saeed Murad. I'm a partner at Global Ventures. We're an early stage venture capital firm investing in growth stage companies, sector agnostic. My background is I started in private equity, then did some investment banking, strategy consulting, and operated a few businesses in C-suite roles before moving into venture capital. Thanks for having us.
Okay, thank you so much. Traditionally, equity has been the way to fund the scaling up of a startup. Have you experienced the change and these alternatives? There are startups now looking to fund less with equity and more with other alternatives. Silicon Valley, we have SAFE, SAFEs, grants, and we also are seeing more convertible instruments. What is your opinion and or experience about it in your funding and the things that you've been seeing?
Happy to take that one. So I think the earlier stage of the company is the more customary it is to go with a convertible instrument, whether it's a SAFE, a KISS, or just a standard convertible loan note. The main reason for that is it's just difficult to price sometimes a company at an early stage where you need to go for an equity round, and so it's kind of deferring that pricing a little bit and allowing a little bit more time and room for the company to mature a little bit before you go through and run legal work, etc. Setting up the constitutional documentation for companies that's involved with an equity round can be a little bit cumbersome, expensive, and laborious for a company at a very early stage, and so you can resort to other alternative instruments. But other than equity and convertible notes, there's also non-dilutive capital coming in the form of, whether it's venture debt or other such forms.
No, you're fine. I'm just signaling.
So there's a multitude of it. At least in the region, we're starting to see a little bit more maturity around sources of capital and on different alternatives that are popping up. But by and large, it's restricted to, at least at the early stages, convertible notes and instruments, and then equity.
Thank you.
Actually, being from the blockchain, there are a lot of tokens, or there are a lot of possibilities to raise capital through the tokens. Of course, it's a very, very novel instrument, but it also exists, and there are different types of tokens that you can sell: governance, utility, etc., etc. So that's a very, very interesting, innovative instrument. VNX actually started as a platform for syndication of the VC deals and tokenization, allowing secondary trading. This is one area which I think will be growing significantly. In terms of the equity versus the new instruments, in my view, my personal view, if you have a strong lead like a VC or an angel syndicate, it's better to go for the equity. Strong lead will set the documents, will do everything properly. In the situation where it's kind of mixed bag of the investors, probably SAFE is a safe instrument. Convertible notes I personally like, but I always cap them, because if I invest now, I want to know, how much it will be. So that's a basic answer to your question.
I could jump in a little bit here. Thank you, colleagues, for adding this up. So I think you brought some interesting ideas, but we also cannot forget about crowdfunding. So it's another type of alternative financing form that some countries could look up to. So in Baltics, it's a common thing. There's a trustable crowdfunding platform, and you can invest through them. But as Alexander told, also Angel Syndicate is like a very safe and trustable thing. So, yes.
Most of the investments I have made have been in Egypt, and the laws in Egypt are not very flexible. Like, we don't have safes, we don't have convertible notes. So we have to go to the classic ways of just going in and buying equity in the startup, whether it's a limited liability or a shared stock company. So this is most of the investing. And then when they have enough money to register outside of Egypt, like Fawry, for example, is in Luxembourg. We have other companies in the Netherlands, and Mauritius, and BVI. Then we can do this stuff. But usually at the beginning, it's just a company in Egypt, so we just have to become part of the company with the classic way of investing.
Okay, that brings us to a very interesting question, which is not on my list, but given that we have enough time, it is true that some countries are much more difficult for startups to establish themselves, to constitute themselves. So do you have like recommendations of regional countries where it's very easy? Maybe here in the Middle East, there's a few countries that are very easy to register, constitute your company. We have Alexander and Helmut, who are more from Northern Eastern Europe. And can you give us recommendations of places where you would recommend, the startuppers to actually constitute their companies?
From the legal perspective, my preference is for the English law. Obviously, the jurisdictions are different country by country, but it's typical that the holding company is set up in the UK, Luxembourg, or Singapore in the case of the Southeast Asia. I'm not 100% sure with the environment here, but I would assume BVI would be the way of choice. The reason is flexibility. In many jurisdictions which are relying, for example, on the continental law, which goes back to the Roman law, it's pretty strict. Pretty much like in Egypt, you can do this, and if you cannot do this, sorry. So flexibility is very, very important in that particular sense. But going back to your point on whether in some countries it's way too easy or not too easy, I think it's a very, very important point. For me as an investor, I don't want the situation to be too easy. And I see that a lot of the people coming from the countries that are struggling, like the Philippines, like Myanmar, etc., Vietnam, in the former Soviet Union, where you really have to fight, they have a fighting spirit. While in Western Europe, I'm not sure if this is the situation here or it will ever be, you have a converse problem, i.e. The founders expect, and again, no gender bias, but I am a princess or I am a prince, whatever gender is, and therefore I have to be catered. It's the investors who have to provide capital, it's the investors who have to provide the network, it's the government that has to provide blah, 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 blah. And thank you very much, I'm actually already at work, so where's my... So I think that's the converse issue of getting it too easy. Business is a very, very tough, very challenging. When it's too easy, from my point of view, there's a higher chances of failure because people didn't try hard at the beginning. They didn't meet the problems. They didn't solve the problems. When it's too easy, you do not value it. Therefore, there is a converse issue of supporting too much.
Thank you so much, Alexander.
I would like to add up that you cannot do business if you want to do business just because it's trendy thing. So you need to be passionate about creating startup or company, and this comes up whenever you are willing to go. So Europe is the most familiar market for me, like Nordics and Baltics. I know, for example, in my country, in Latvia, we have startup-friendly visas for startup founders, and this can bring talents from everywhere. As Alexander told, it doesn't matter, from Myanmar, Asia, or even Africa. So if you are willing to work, you will be greeted with open hands. And I think, yes, I would recommend to start also business in Baltics.
Thank you. Yes.
I'm not a lawyer, but I'll just say from my point of view as an entrepreneur, like the Delaware was very good with us. It was very easy, it was very smooth. The Netherlands was a bit more complicated in executing things, and the amount of papers needed and the lawyers that work there are very expensive. ADGM, Abu Dhabi here, was also very, very good for us. I think the only problem that I fear is the part of that some places like BVI or Mauritius, some investors are usually tell you, no, we prefer this than this. So it usually goes, we follow the money. Like where the money wants to be placed, the entrepreneur has to go there. So it's usually not our decision. But if we would choose, I would choose either Delaware or ADGM.
Thank you.
Yeah, I mean, I think I concur with my colleagues, but what I'll say is the nuance here is around investor preference and where they would be comfortable investing. So jurisdictions like the Netherlands, Luxembourg in Europe, or even Delaware in the US, Singapore, they're all jurisdictions that are very comfortable for investors to go into because the legislation, regulation, etc. is there to protect investors in case of any circumstance. Other common jurisdictions that we see, particularly for holdcos, are BVI, Cayman, Mauritius, etc. But there are some investors that may shy away from those areas. I'm not saying everyone would, but some. We've seen that happen in certain cases. So just be considerate of, again, who you're targeting, who you're speaking to. If it's, for example, the DFIs, and the DFIs are very strict with the jurisdictions which they invest into, and just be cognizant of that as you're building up your holdco. Your opcos need to be in line and in check in each market that you operate in. So if, for example, you're operating in Egypt, you need an operating company in Egypt that could be owned ultimately by that holding company that's offshore or in a different jurisdiction.
Thank you, Saeed. Okay, so moving on. What is more important for you when looking to invest in a startup? Is it the idea? Is it the team? Or is it the validation that the team has gone through? Or is it something else that I'm missing, with the key metrics?
Okay, so I look at four things mainly. The total addressable market, how big the market is for the startup. Second thing is, of course, the team, what they built before, how they did it. I know that a lot of people say like Mark Zuckerberg dropped out of university, Elon Musk dropped out of university, but this is 1 in 7 billion, you know. So most of the successes comes from actually people who like made startups before and are more experienced. So I look at the team. Also the regulations, especially if it's a fintech company in many parts of the world needs a lot of regulations. And the last part is the twin. If it worked in another similar market, like in Egypt, we look at Indonesia, Halan, we copied Gojek from Indonesia, let me be honest. Fawry, we worked on Bradesco from Brazil. So Maxap, they learned from a company in India. So Maxap is a B2B e-commerce. So all the successful companies that I personally knew or was part of copied or Egyptianized or localized a different model from a different country. So these are the 4 things I look at.
Thank you, Mr. Nagati. Okay.
I may come up with a new term, but for me the most important would be market founder product fit. So you need to have all those cases in one place. So to see if this startup is investable. As Nagati said, market is very important. So as founder, so as product. You need to see this product fit in the certain market. You need to see what this team has done before. So it's also important, or how they are validating their company, or approaching investors, or maybe clients. And that's also important. And all those factors is very, very, I would say, serious to consider.
I think it's pretty much it.
Okay, yeah. Okay, so moving on. What key metrics, more specifically, do you want to see from startup founders when they are presenting to you with those, in a pitch? What specific key metrics, or, so we said, Nagati said target market size, obviously, but other things like CAC, cost of customer acquisition, or lifetime value?
It's the time, it's the level and the time when you invest. Obviously, if you're going for the C round or further, then cost of cost of capital. I mean, many metrics are there. If you go at the very beginning, then it's basically like in retail, location, team.
Okay, because
So
I think we're focusing today more on very early stage.
If we're looking really at the early stage, then my personal feeling, it's the team, the impression, the connectedness to the industry, the understanding of the problem that they're trying to solve, obviously their experience.
But you would invest before even an MVP has been tested somehow?
Sometimes we invested when the company was not even created, i.e. we were at the creation of the company. So the metrics simply doesn't exist.
Unexistent.
It was like the background of the team, and by the way, now it's one of the best AI companies in the UK, in the top 20. They're doing phenomenally well, but there were just 2 guys, engineers, who saw a problem on the market. One quit the job, another one quit the job to try to address it, and here we are.
Thank you, Alexander. Saeed?
For us, as a growth stage VC firm, we do look for some metrics. Obviously, those are nuanced and different, whether it's a B2B business, B2C business, there's different elements to it. But as you go earlier, what you want to see is that vision into what metrics they're supposed to be tracking, what metrics they're supposed to be looking at. So the relevance of understanding the nuances of how you build out and test out your initial cohorts, how you look at your path to monetization. Are you going to be able to achieve scalable unit economics ultimately? You want to be able to see at least a directional element towards these things. So it is important that entrepreneurs are introspective and that they understand what data sets they're looking for, what metrics they want to be tracking early on, and what they're building towards. So as they're seeking to achieve product market fit, part of it is also being able to highlight those nuanced metrics and how you build out towards them.
Thank you, Saeed.
That's actually the job of the VC then, to help the team understand it.
I'll add something here. I was lucky enough to be part of 3 unicorns in the region. And there was something in common, is that the founders or the people who are running it knew what their superpower is, as we were saying before here. Like, I know that I'm a 0 to 1 guy. I'm not a 1-200 operator. So at one, I have to just go to the back seat and let someone else do it, or else I will flop. So it's very important for the founders to know what to do and what not to do, and not to try to learn on the behalf of the rest of the startup, because it usually doesn't work. This is my own experience.
I can say one thing that founders shouldn't do. From investor perspective, one of the main points I saw that if founders exaggerate valuation of company, it's also one of the red flags for investing in company. So the appropriate valuation will be fine, and you need to have those next steps, what you want to achieve.
Okay, thank you very much for that. Very interesting. I always ask my students, to get me some type of projections, knowing that they're coming up from thin air, right? But is that something that you want to see? Do you want to see a projected income statement? Do you want to see some type of, marketing budget, realistic marketing budget, or go-to-market?
The best bets I personally did on startups, I didn't look at a single paper. I just sat with the person. I felt he or she was good, the team is good, and it worked. So the numbers can be done and they can not be done. So I think it's about the team, and this is what matters at the end.
Thank you. No.
Of course, the projections, they are like moving numbers, so they may change by the time. But as Nagati said, team, maybe vision for upcoming future, but you need to be aware that something might go wrong, or something might be like better than it was before planned. So you need to plan some steps, but don't plan too far away.
Okay, so with a 1-year projection, I'm talking very early stage.
I'd say it's important to at least understand what you're building towards. So if you're going from, launching the business to whatever your next milestone is, you need to be able to raise for that milestone and know where your proceeds are going to be used and where they're going to be deployed. So whether it's a marketing plan, or whether it's a hiring plan, or whether it's investing in really focusing initially product first before you take it to market, then you just want to really highlight and understand what the objective is of that round. And quite frankly, the best teams are the ones who are able to articulate that and spot that early on as well.
Okay, thank you. That takes me to how much runway should founders have? Because funding is so complicated at times, right? A lot of our startups here are looking for investment, and at least my students think that there are going to be lots of investors knocking on their door, and that's not the case. Usually you need maybe 6 months, 1 year for that investment to arrive. What is your recommendation for their calculation, maybe when they're at the FFF stage, family, friends, and fools stage? What type of money should they be, trying to acquire to take them on to that round of reaching the angel investor or the early stage VC funder?
Here probably I will address it from both sides. From the VC point of view, I remember I'm a graduate of LBS, London Business School, and one of the professors who created entrepreneurship school of entrepreneurship at LBS, he's actually also an angel investor. And I remember John Mullins, a very good professor. He actually told me, Alexander, whatever amount of money you would give, it will be spent within 12 months, meaning that if people cannot spend it, they will waste it. So that's just don't overfund the company. So that's the, and I saw it multiple times that, when there's a lot of money, then it may not necessarily be spent wisely. Now, looking back as an entrepreneur, I want to have as much money as possible for a very simple reason. Things never go to plan. No plan survives the first contact with market, enemy, whatever it is. Therefore, you need to have a runway in order to modify your plans, in order to hire another person, etc., etc. And if you don't have it, you're against the wall. You cannot go back to the same investors. you can, but it's much more difficult to ask for the money, to say, look, guys, this didn't work, etc., etc. Therefore, it's a constant battle between these two extremes. And as usual, the compromise is somewhere in the middle.
I was speaking yesterday to Hussein from Tabi, and he told me a quote that I really, really liked, which is, act as if you don't have money, and money is an option. And this actually is very good. Like most of the startups that really, really make it big, they don't depend on investor money, and they focus on the unit economics and making it profitable. And if we have money, we're gonna grow. If we don't have money, we're gonna also grow, but at a slower rate. So I like the startups that where money is an option, and they're not on, like when they tell me I have 3 months of runway, 5 months of runway, I run away. I run away. I don't put money. I like the ones that say if we have more money, we're gonna go further. But if we don't have money, we're also gonna keep going. So those are the ones I like.
Do you want to, Helmut, share something with
From my
us?
experience, I could tell if MVP is ready, and this is very, very early company, you should count your money to your next milestone. So, and then you can go with the high sky projection. Then you can plan some bigger rounds to achieve. But from investor perspective is also to have some paying customers on board, and that's also important that you can bring to your.
The validation, right? Having validation and bootstrapping, trying to bootstrap as much as you can, and thinking that that money will actually help you grow, but you don't depend on it. But unfortunately, there are startups that require initial maybe 50,000 to I'm sorry, 50,000 euros, let's say, for app development or some type of heavy IT. What do you do when you're a startup, you don't have that type of money, and your friends and family can't get it for you? That FFF.
I think that technology is a tool, and if the idea works, it can work without technology. Like Karim started as a call center, Halan started as a call center. Just a phone, I want a cab, a phone, I want a 2 or 3 wheeler, and then when the idea works, you can then invest in technology to scale it. But I don't really think that the very, very good ideas, except for very few that have a lot of infrastructure, they don't really require a lot of cash. If the idea works, it works.
Okay, so a concierge type of MVP that you are
like if
testing
you like
out and acquiring clients with that, and then if you have the money, then you can go into the app development and.
Like if there is a real need, the consumer will find a way to reach the service, and then if there is technology, it will improve the service. Okay. But if there is no real need and you're forcing the service, then no matter how much you spend, it's useless. Yeah.
Thank you. Does anyone else want to?
It depends, of course, very much on the industry.
Right,
of
on
course.
the start.
But in some industries, you just cannot avoid having an outlay, but then you look at the team. So we're coming back to the point that we've already discussed.
Okay. So what would you recommend to startup founders who are here in the audience today is the best way to get in contact with an angel investor or with a VC, depending at the level of funding that they're looking at?
I'm going to say one of the most important things is find the right investors and the right people to join you on your journey. Don't just chase capital for the sake of chasing capital. It's important that the people that you bring on board who join you on your journey are people that can fundamentally be part of that vision, share that vision, help you grow your company, be more than just sort of capital providers, but rather strategic players on your cap table. It's critical that you effectively do your research, identify who those investors are, and then bring them on board. The right VC for the right firm or the right angel investor for the right firm are very different in different cases. So make sure that you do your research, and then you have to be a hustler. You have to be able to chase down those people, identify them, explain why there's a very good marriage to be consummated here, and then take it from there. That would be where I'd start with.
I also think exposure, like we got our first round in Halam from being in events like Rise Up in Egypt. Our second round from Startup Grind in Redwood in San Francisco. So I think you have to be on the top of mind of investors. Like, for example, if you didn't meet Saeed or Global Ventures, you won't be able they won't know you. The investors, very few of them go on looking for startups. Usually the opposite happens, let's be honest. So the ones that are more exposed and are everywhere will get more money than the ones that no one knows about. So I think exposure is super important.
Helmut, you were telling me earlier maybe about crowdfunding and the importance of also maybe LinkedIn reaching out, having people reach out to you.
I would answer to this question like LinkedIn or emails approaching investor, it works, but on the regional side. So, for example, if Indian guy wrote me on LinkedIn, please, maybe you can consider to invest in my company, most probably I will not answer to his email or LinkedIn message because I don't know the region or the sector or what are the legislation there. So, but if someone from Baltic or Nordic countries approach me, I would glad have a meeting in person so we can discuss something. He can tell me more. I get to know him. He introduced with himself, so that's better if you like meet with person in person, and that's the case.
Thank you. Alexander, do you want to add something?
I've seen it from both sides, obviously, but what is interesting to me is compared to when we were starting, there are different avenues. So what I would recommend is to try all of them. The company builders apply to company builders. There are accelerators in your areas, apply to accelerators in your areas. There are no accelerators in your areas, apply to company builders and accelerators out of your area. There are different programs in different markets that are addressing, helping startups from Kyrgyzstan to move to, for example, Netherlands, etc., etc. So, kill what you can eat. One angel, address him. Try to research whatever angel organizations are there. Try to research the VCs approach. I mean, basically, it's the name of the game. Try everything you can.
I want to add up a little bit to what Alexander told just. So you need to see your next market, what you are planning to approach. So either if you are from Egypt, maybe you can go to United States of America Accelerator Fund. So it works perfectly. So bigger market. As Alexander told, you need to do that because it will help you grow faster.
But that's also the question. If you're passionate about idea, you don't need me to tell you what to do. You are doing it because you want to realize it. If you need me to tell you how to, to achieve it, then there is an issue.
Then we have a problem, right? Okay, so as a company goes from startup to scale up, what do you recommend for founders? Any recommendations?
To take some time off. Like I suffered from this, and I actually dropped down on the stage 2 years ago, and in a boardroom in the beginning of this year, because I didn't have some time off. So at the end of the day, you are the investment as a person, so you shouldn't push hard on yourself. Everything will come through one way or the other. So take some time off, focus on yourself, your health, what you eat. Don't overdo business, because the social media is like a cage that teaches wrong things, like work 100 hours a week, don't eat. Doesn't make sense to me. So you have to take care of yourself, make sure you're a good human being, because this is what lasts.
Thank you.
I'd add to that, I'd say always be introspective. So as you transition from startup to scale up, understand what the business is going to need to succeed in the next stage. Understand what you need to be solving for, whether it's complementary team members, whether it's different types of resources, whether it's different partners on board. Just make sure that you have a deep understanding and an inward-looking view initially to say this is where we need to be able to build out and improve and enhance, and then an outward-looking view to say this is what we're going to be able to achieve with those resources that we have available to us. So it's quite important that you spend time to take a step back, recharge your batteries and make sure that you're all there mentally and you're ready for the challenge, and B, you understand what you want to complement and surround yourself with.
Thank you. So we have time. So what would each of you recommend to the founders that we have in the audience. And then what we can do is take some questions, okay? Does that make sense, or should we just start asking questions? Okay. Questions or? Sure. Okay. So let's get some questions from the audience, please. Does anyone? Let's take advantage of our VCs and our angel investors.
Hi, I'm Shantha Bloom, and I have a small startup in Africa dealing with last mile mobility. And we've been on a 3-year journey, and we're getting closer, but all of the things you said about it taking a lot longer and things that weren't planned, when do you accept defeat, or do you just go till you've knocked on every door? I have a 15-year-old son that keeps on asking me when is the dream actually going to be realized?
I think for me, it's a very personal question. I guess everyone would answer. I go full until, it's really the end. And it's the same from the people who have invested. They're different, of course, cases. But some people just give up early. And it's very, very sad to me because, putting a little bit more could have. But personally, as an entrepreneur, I fight to the end. So that's actually.
Yeah, I would encourage you. J.K. Rowling, the author of the saga of Harry Potter, she was rejected 11 times before a publisher. And Jack Ma, we have his wonderful story as well. So I think that, as an entrepreneur, you have to keep on fighting till the end almost, till you finally run out of patience, time, and energy. No.
I'm going to say I think one of the most challenging things for someone to do is be an entrepreneur. It's not spoken about enough. It takes so much courage. It takes so much bravery for you to take a step out and chase your dreams. But the reason why you were able to muster up that courage is you fundamentally believe in what you're building. You see that there's a massive problem that you're trying to solve for. And so if knocking different doors isn't working, then maybe the path that you're taking is not the right one. Maybe try and maneuver, try and pivot, try and change direction a little bit. But ultimately, there was something that lit that spark and drove that passion and drive for you to take a step out and to actually jump into entrepreneurship. So I'd say, don't give up as long as you see there's light at the end of the tunnel.
Thank you. Can we get another question from the audience?
Okay. Hi, and thank you for all the recommendations you're giving. I'm a startup founder from Tunisia, and we're 8-month-old startup, and we've been already one of the best 15 health innovations in health in Africa. My question are 2 questions actually. One goes first for Said. Is it important for you to see that you go through the startup journey before getting on, to go the VC journey before to see their perspective of things before going to ask for investment? And the second question, we're a hardware software startup. And most of the times when we pitch to people, let's say 80% or 90%, as soon as they hear it's a hardware startup, they just run away. So what's your intake and what are your recommendations? What is your, basically all of you, I would look forward to have your recommendations about it. Thanks.
I'm biased in thinking that, some of the best VCs are historical operators, people who understand what it takes to build businesses and the challenges and nuances of what it takes to successfully build out ventures. To answer your first part, but it's a very personal view. There's different types of VCs and different types of investors that you may want to target. Back to my earlier comment about finding the right partner for you. If you need somebody to help you in building out your plan, building out your business, and great. If you are a 7th time successful founder and you know what you're doing, then maybe what you want is just capital and you want somebody to sort of just stay out the way. So it's a nuanced question and it's personal to your journey. The second part is, again, you need to find the right partners. The name of the game if you're approaching VCs is going to be scalability. And the reason why people shy away sometimes when they hear the word hardware is they worry about the scalability and the rollout. Software scales and goes across borders very easily. So the question becomes, what is the USP that you have? Why is the blend of software and hardware that you have unique and why is it scalable? So if you rejig your pitch to be able to say, this is why this is an important necessary element that can be adopted, then I think you'll have more success in having people hear you out. Happy to chat later as well offline, just not to.
Yes, I think we have a lady and a gentleman on that side that they want to ask questions.
Hi, I have a question. I have two non-profits. A lot of things apply, but asking money is different because we're not commercial. We don't have a product. I'm in the service business, prevention of cancer, informing patients. There's nothing to gain. Who should I approach?
Let me take this one. I think donators, you have several opportunities. You can go to social responsibility departments of companies to reach out to them. Lots of companies do give money to not-for-profit organizations. And then your donators, and you have also crowdfunding pages. I don't know if does anyone else want to...
No, you just answered to my next thing I wanted to tell.
Hi, my name is Josiah. I'm from a country called Namibia in Southern Africa. So basically, I'm from an organization called the Startup Namibia. But what we also try to do is build out an angel network. And my question is, how important do you think it is to have companies come through incubators or accelerators as opposed to just walking off the street, building own products and coming to you as investors? Do you think they are better quality or not? Or it just depends on the situation?
Okay, let me answer this. I'm a fan of incubators. I'm a partner in incubator. And actually this guy here, Mr. Ayman, Dr. Ayman Ismail from the AUC is one of the biggest startup incubators in Egypt, AUC Venture Lab. Many of the big names came up from from VLab. I think incubation is extremely important because sometimes you don't know the basics. And at least in an incubator, you're gonna get the basics. So, and also the exposure, like the AUC Venture Lab, for example, or Flat Six Labs, or all of those in Egypt. A lot of the big names today, like Paymob, like Swivel, came up from those. So I think it's very important to be part of those. It's not for everyone. Like if you're big enough and you know what you need to do, then you don't waste your time. But for the young ones, for the small ones, I think it's a must. And we learned a lot from those incubators. I was part of 2 startups that were part of incubation programs, and they made it very big because of people like Dr. Ayman. So I think that it's very important to learn from the incubators and to make use of their networks.
Hello. So basically, I want to understand what VC expect from a startup, what qualities do you expect from a startup, from the entrepreneur. So what are key qualities you expect? And my second question is basically like, suppose we are a blockchain startup and we don't have any revenue right now, we don't have any traction to prove. So how do we show traction to investors?
I think the most important thing for an entrepreneur is to be persistent and to keep going. Like Fawry became big after 14 years from start. Kareem after 5 years, Halan after 5 years. I think it takes time. So persistence and to keep going is a talent. You don't have to stay as the CEO, but you have to keep going as part of the team. And this is very, very important. Like this is what differs people from each other. Even if the idea is bad and you keep going, probably you'll get somewhere. So I think this is the most important thing in my opinion.
Thank you. Any more questions?
Hi, I got a question for Mohammed. Basically what you said regarding the team is that you judge them based on their previous successes, but what about a first-time founder, especially that, you know, they do have the grit, and or at least that's what they think they do, so it's really hard to sort of have like a data set of their previous successes. So how do you solve that?
Let me be honest, I'm speaking about an angel investment as a person. I never invested with a first-time founder. I might be wrong, but I think that it's better to take the basics from a company. Like I worked for Fawry and worked for Kareem and then started a company. So I follow what worked with me. I might be wrong, of course. There is outliers, But my advice to most people is to first work for a startup or a scale-up, not a corporate, if you want to start a company. Understand what's a people department does, finance, legal, and then do something on your own. Because the amount of time you will spend learning the basics as a founder will take out from other things, and it's very hard. And this can make you lose momentum. So this is my personal opinion, but of course there are outliers, but this is what I do.
Do we have any other questions in the audience?
Hello, my name is Redouan. I'm a sales manager in Asianic Center of Business in Algeria. My question is how to maintain your emotions and psychological state in difficult crisis of the market, especially in case you lose money, including investors' money. Because I'm a beginner investor. Thank you.
Psychological, how do you keep sane? How do you keep your mental comfort? Oh, you don't. That's it. It's as simple as it is.
No, I think that it's a roller coaster. Okay, I think that an entrepreneur's life is like a roller coaster. Sometimes you have in a day you can have a very happy moment, then find out that something's going wrong and crash, and then some good news will come up. So it's really a lot, and I always recommend this to my students. I think that meditation, having silent moments in your day where you are able to silence your brain, calm your emotions, take a step back from your emotions so that they don't personally affect you. That's going to be very, very, very helpful.
Or how Nagati previously said, you need to keep balance. So you need to keep balance in everyday life, what you are doing.
One thing that I've seen work quite well is always celebrate the small wins as well. Don't forget to take a moment to celebrate even the smaller achievements, even if you don't think that they're monumental or game-changing, whatever the case may be. That always keeps you in check and keeps you balanced and keeps you motivated to continue to do more and strive on that path to success.
I also think the team, like if you're a team of 5 and 3 of you are losing faith and they're not doing good, the other 2 will tell you, no, we can keep going, and the opposite. So having people around you, everyone with different mental status, pushing each other and saving each other from collapsing helps a lot. So I think it served me very well, actually. Thank you.
Thank you for the opportunity. I'm Maureen Meda from Zimbabwe. My company is Satco Academic Trust Colleges. I promote the enrollment and recruitment of international students into higher and tertiary institutions in and outside Zimbabwe. As a startup, I'm really encouraged and I really want to appreciate each and every panelist right now. And I'm saying, look, as we are starting, we need mentors that encourages us, and it actually gives us direction as a nation builder with a vision to become a big entrepreneur. Thank you very much. I'm really impressed, and thank you.
Thank you.
Thank you.
Thank you.
Hi, ladies and gentlemen. Thank you for the opportunity. I actually myself was a China background VC, and we always aiming for like big, market scalability in our perspective of background. But I can see the difference. Compare with like different regions VCs. Like some regions really are focused on profitability at the relatively early stage, but Chinese VC and PEs don't care about too much about cash burn because they aim like big market, they aim like big user base. So I actually want to understand the beautiful balance between scalability and profitability at early stage. Thank you so much.
To me, it depends, if I can answer, on the type of the company or type of the VC. To me, big market doesn't appeal because the size is small. Therefore, I always invested using the formula when everyone is going to find gold, it's time to invest into the handles for the shovels, because basically these niches supply into the big market, is easier for the companies to establish, market dominance or profitable businesses. But obviously then you have a totally different, like Chinese VCs, like American VCs, who, if you have a big opportunity, we just print the money. We just, exactly. Whatever money, is necessary, we will get it because we are the countries that are printing them. So I think it's very, very important to see from which perspective or from which fund's perspective you are looking at it. And for the angel investors, or for myself, when I'm an angel investor, I'm always looking for a possibility to have a very clear defined niche which this startup or this team can actually take, however small it is. I mean, it needs to be sizable, of course, but it needs to be a niche, not a huge one.
I'd like to add something too, like as Alexander was saying, if you have a lot of money, you're gonna spend it. So if you say this to a startup, they'll just spend more on things that they might have not spent on. So I think the best way to do it is to make use of every dollar and to focus the money on growth, not on just giving money. Like I know a certain startup in Egypt, I met them. I understood their model. I got it that this model won't work and it will just be a loophole of burning money, and at the end they closed because of the same thing. If they had $1 billion, they would have also broke, but maybe 3 years later. So the model has to be right and the money has to be fuel for growth, not for subsidy, because this is a very big difference.
Nagati, I want to ask you a question. that takes me to, what do we say to startup founders or a team, a startup that is actually not using the money that they were given? So they haven't been needing to use it or whatever, but...
I never met someone who did this, honestly. So it's either you have money you're using for growth, or you don't have money and your model doesn't work and you close. I didn't see any other model.
But what happens when you're actually have the money, but maybe your company has had to pivot, right, from where the money was coming from initially? COVID made that situation that forced a lot of companies who were in industries that closed to have to pivot, and they have this money now, and I guess they have to pivot, find a new.
We had a case like this, and we're now spending the money that we took last year because we didn't spend it. But you will spend it or just send it out to the investors as dividends, and they'll be even happier. So.
Okay, great recommendation. Do we have any more questions from the audience? Okay, well, thank you, Nagati, Helmut, Alexander, Said. Thank you. It's been a wonderful morning. And I'm sure the startuppers here in the room will like to meet you personally as well.